Hello, welcome back. We're at the mining investment event of the North here in Quebec City, Canada. I'm with Dave Cole, the CEO of EMX Royalty. Dave, good to see you.
Great to see you, Peter. Happy to be here in Quebec City.
Let's start things off, just very, very briefly. Company overview. Who are you? Where are you listed? What's your ticker? That sort of stuff.
EMX Royalty Corporation, ticker symbol EMX. We keep it simple. Yep. Trade on the New York Stock Exchange, and our primary listing is on the TSX.
Awesome.
200 million USD market cap.
Good. Okay, so before we get into the thick of the portfolio at the moment that you're holding, tell us a little bit about your background, if you don't mind.
My educational background is economic geology. I worked for Newmont Mining Corporation for about 18 and a half years, creating value at the pointy end of the stick all around the world. Indonesia, Nevada, China, Turkey was my last job with Newmont before leaving to pursue my passion, partially influenced by Pierre Lassonde, actually, just looking up to him as a mentor, to build a prospect generation company and evolve that into a royalty company.
Awesome. Okay, so let's have a look at the portfolio as it stands at the moment. Could you just talk us through it, and also maybe towards the end actually what the main priorities are in the company?
So our main priority is astute allocation of capital. That's my job as CEO, right? I've been doing this for 19 and a half years now. And we have a good track record of allocating capital astutely. It doesn't mean that everything that we touch turns to gold, but our long-term track record is excellent. And the key way that we build our royalty portfolio and thus capture the value of mineral real estate that we control around the world, which accumulates up to 5 million acres of mineral real estate globally, cutting across 300 individual projects. Right? But the primary way that we do that is by executing the prospect generation business model focused on the royalty component. So we're royalty generators. Okay. So we acquire prospective mineral rights, add value by coalescing geologic data, sell on to counterparties that are capable to invest their money in the project and pay us annual payments and share payments. We've done particularly well with the share payments over the years, and always a royalty on the back end. And that's royalty generation. It's a great way to build a royalty portfolio, but it does take a long time for that portfolio to mature because the timeline in the mining industry is so long towards production. To help round out the portfolio and to kickstart it and advance it more quickly, we do buy royalties to augment the portfolio that we're growing organically. Some of the key royalties within the portfolio, Peter, we have purchased. And then the third thing we do is strategic investing, and our strategic investing track record has been really solid with some great gains for EMX.
Let's break this up. So let's go into the strategic investing to start with. So what are the main investments that you've strategically invested in?
So right now, the main one we have on the books is Premium Nickel Resources, which is going public on the TSX via an RTO with North American Nickel. We're really excited to own about 6% of the private company that's being vended into the shell. Actually, it's not a shell, it's an ongoing entity. We're extraordinarily bullish. It's a past producing nickel sulfide system in Botswana with what we believe is substantial endowment.
No, well, Botswana's famous for large nickel projects, so that's good.
That's correct. This is the biggest one there.
So that's the strategic investment side.
Yes.
What about the royalties that you have at the moment? Are any cash generative at the moment?
Within our 300 mineral property positions worldwide, we have 5 that are writing checks to us, right? So the Leeville mine on the Carlin Trend in Nevada has been a long-term payer for us. We've reached payback. We did buy that royalty when we merged with Bullion Monarch and took out Bullion Monarch. That's now reached payback. We're happy to be on the positive side of that one. And it's paying about 2.5 million USD per annum right now. Nice. And that's a gold asset. And Barrick, the operator of the Nevada Gold Mines joint venture, continue to announce more discovery drill holes within our footprint and adjacent to our footprint. It's one of the key areas of focus for them there at Leeville. Then another key cash flowing asset, right now cash flowing at approximately 8 million USD after tax, and I'm giving you the after tax repatriated to Canada numbers in USD. And that's paying $8 million a year at Caserones, the copper molybdenum mine in Chile operated by JX Nippon. We're very, very happy to have purchased 2 tranches of royalties that cover that large porphyry copper system. Long term, we're exceedingly bullish on copper prices. And then what will be our largest cash flowing royalty in 23 is the Gediktepe mine in Turkey. And the upper oxide zone, we have an oversized royalty. That was a 10% NSR in the oxide zone. That's gold and silver enriched. The sulfide zone at depth is copper and zinc dominant with a good precious metals credit. That's a 2% royalty. We expect the sulfide to come online in 23 or 24, late 23, early 24, but the oxide zone's producing now. We'll start to receive our first checks any day now as they are loading 2.5 gram rock on the pad. So we're expecting those royalty checks to start up any day. That will cash flow looking forward around 12 million USD per annum from the upper oxide zone. And so that's a pretty exciting asset for us. And then Balya's lead, zinc, silver also in Turkey. And that one we're expecting about $500,000 yet this year, but we expect that to ramp up substantially as they are developing greater underground infrastructure and working from more and more headings. They're also planning on expanding the mill capacity that they have from 5,000 tons per day to 7,000 tons per day. That's meaningful to us as a royalty holder. That's a 4% royalty, once again, lead, zinc, silver.
Just want to touch on something that sort of we're hearing at the moment. Obviously, the whole point of having a royalty company is sort of diversification, right? You've got less risk in terms of just operating a single mine, for example.
Yes.
But what about in terms of the world that we're in at the moment with the amount of inflation we have? Obviously, it sort of works in that way as well, right?
Peter, great question. So royalties are phenomenal financial instruments with immense embedded optionality, most importantly, discovery optionality, but also commodity price optionality. And let's talk about that. So we're in an inflationary environment. That means costs are going up. Well, typically royalties are NSRs, net smelter return, which is actually gross revenue to the mining company. So it's a cut off the gross revenue. So we're exposed to commodity prices going up, but we're not exposed to the cost of discovery, the cost of development, building mines, et cetera, et cetera. The royalty holder pays none of that. So ironically, and very much part of how these financial instruments are designed, inflation is our friend.
Yeah. Awesome. And let's go into the other projects that you own at the moment, the project generation and the royalties that aren't actually in production yet. What exciting projects, I know you mentioned one of them that's coming online in 2023, but what else is in the pipeline that may add significant value moving forward?
So there's one really interesting one that is operated by South 32 in Arizona, and people know it as the Taylor Project or the Hermosa property. And South 32 bought that from Arizona Mining for $1.x billion. Well, we have the claims immediately down dip and the extension of that mineralization, also controlled by South 32 with a 2% royalty on it. And it's a good example of discovery optionality. South 32 announced some fantastic copper intercepts. That lead zinc silver system actually zones into a copper deposit on our property. South 32 has made that announcement. I think a lot of people have not yet fully ascertain the value that's represented by our 2% royalty there. And that's a good example. But I could go on and on. When you have 300 mineral property positions and tens of millions of dollars a year being spent on drilling on your properties by your counterparties, not by us, that's a lot of optionality.
Okay. Let's look at more of the corporate side at the moment.
Sure.
So what's the capital structure looking like at the moment? How much cash, how much revenue are you generating? How much cash is in the bank?
We're right on the cusp of substantial new cash flows coming in, as I mentioned. And I should also mention the Timok project. That one's coming into production as well. So we have these 5 assets that are either coming into production within the next few months or are already producing. So our cash flows are growing substantially. Looking out to 23, it's going to be a much bigger number than it was in 21. And we will be publishing official guidance probably within a quarter or two. I know the market's been anticipating us to announce guidance. We want to get the Gediktepe mine into operation. But right now we're sitting on around 15 million USD in cash. We have a tradable securities portfolio, which is around another 15 or 20 million dollars worth of stock. We have other strategic investments on the books as well that would go beyond that. And we have $44 million USD as a note that we owe to Sprott at a 7% coupon rate. Those monies were used to help us increase our Caserones royalty and to purchase the SSR portfolio. And speaking of SSR, they are a substantial shareholder in EMX as part of the deal that we did with them to buy their portfolio to really jumpstart and grow our pyramid of assets. And then I would also like to point out probably one of the most significant events in the recent past is Franco-Nevada becoming a shareholder. Oh, wow. I told you that I looked up to Pierre Lassonde and Seymour Schulitz and those guys. I think the world of Paul Brink. I think he's doing a fantastic job there. It's always been the company to look up to in my view. And I believe it's a nice feather in our hat to have attracted them to become a shareholder. They have 6.1% of us on a fully diluted basis now, and participated in the additional Caserones royalty purchase with us. And Paul Brink has specifically told me that I'm allowed to tell you that the reason why they own stock in EMX is because of our royalty generation business. That's the unique aspect of us. That's our differentiating factor, and we have a track record of for almost 20 years of having executed that business model very effectively.
Just to clarify as well, because obviously project generation and royalties, there are different things, but a lot of project generators, they'll actually just try and find a lot of them do offer royalties
joint ventures.
as well, but they'll do JVs, right?
Yes.
That's not your model at all.
So we actually started off doing it in the traditional way, where you joint venture, but then you have the right to dilute to a royalty.
Yeah.
And after we started having 50, 100 projects worldwide, we realized we don't need 50 joint ventures. What we want is a royalty. The royalty is the most important way and the best way to capture the value of mineral real estate, in our opinion. So we started writing deals where the 100% project equity is available to our counterparty, to our customer. And that actually made the customer happy. That led to more deal flow. That makes us happy because we want the royalty. And so that was the transformation within the company that we made early on, to say, 100% project is available. All we get's a royalty, but it better be a good one.
Good. All right. I know you're saying the guidance is coming out in a few months, but can you give us any inclination whatsoever in terms of what it might look like moving forward?
You're putting me on the spot. It's easier to talk about 23 than 22 because we have these seminal events that are about to happen.
Yep.
So 22 is actually more difficult, but 23, we're looking at well over $20 million per USD in top line revenue. It might be a little bit higher than that. So looking forward to 23.
Okay. And let's talk about key milestones. What do people need to look out for over the next 12 months that are really going to add some value?
Yeah, so Gediktepe coming into production, continued cash flow from Caserones, advancement across the portfolio, more discoveries being made within our footprints, and very much so Balya coming online. Balya's been a project I've spoken of for a decade. Investors are probably a little bit weary of me talking about it. I sound a little bit like the boy who cried wolf. It's a substantial asset. They continue to find more mineralization, high-grade lead, zinc, silver. They're increasing mill capacity, and they're now focusing on mining on our side of the royalty boundary. It will become a substantial asset in the portfolio. That's a generated royalty. That one royalty will be worth more than all the money we've expended on royalty generation in the entire history of the company, which comes back to this concept of astute allocation of capital.
Yeah. Lots of news flow.
When you have that many projects, we tend to have a lot of news flow,
No, awesome. It's been great catching up. Thank you, David.
Thank you, Peter. Pleasure to be here.